Many investors tried to YOLO their way to huge gains during the meme stock frenzy in 2021, with companies like GameStop seeing its share price skyrocket more than 1,600% in just the span of a few short weeks before coming back down to earth. And while the initial craze has calmed, the meme stock trend has stayed popular amongst certain investors because of the promise of big gains over a short period of time. But with great rewards comes even greater risk. On this, IBD explains, we ask, what are meme stocks and should investors be buying them? And here with me to help break things down is IBD's personal finance and management editor, Matt Krantz. So, Matt, what exactly qualifies as a meme stock, and are they real investments?
Meme stocks are really stocks that people online on online message boards are just kind of talking about, chatting about, getting excited about. The classic example is GameStop. It was a stock that wasn't all that great fundamentally or even technically, but it was one that kind of a certain demographic was really falling in love with. And they talked about it and they pushed it up and it just took off. And that kind of spawned a lot of these kind of copycat meme stocks. That were really just stocks that people talk about.
So, Matt, you mentioned GameStop, which, as you said, didn't have the best technicals, but can you talk a little bit about how these meme stocks and maybe short selling are related?
Absolutely. So what usually happens, and what happened initially when this meme stock thing was a thing, is these really clever investors would spotlight stocks that were heavily shorted. So like a vast majority of their shares were held by the shorts. And the shorts have a problem. They face unlimited losses if the stock goes up. So if you push that stock up even a little bit, those short sellers panic. And what do they have to do to stop the pain? They have to buy the stock. So it's actually a brilliant strategy when it was first done. They were pinpointing stocks like GameStop with a lot of short interest, just nudge it up a little bit, cause some panic on the short seller side, and it just made these stocks go up 600, 700%. It was fantastic. But the problem is it didn't last, and they all came back. And the fact of the matter is, long term, it's the fundamentals, it's the technicals that matter. So a lot of these stocks just kind of crashed right back to where they were before.
Right. And as you said, some huge gains here, but with those big gains can come a lot of risk. And these meme stocks can be very tempting for investors because you see things like AMC shoot up like over 500%. People want to get in on that, but can you talk a little bit about why these trades are so risky? And, should investors really be buying into this when they see so much froth around a particular stock?
Absolutely. And it all comes down to timing, like most things. So let's take GameStop, which is my favorite example. Let's say you have two investors. One bought it the beginning of the year, and one person bought it 2 years ago. The person that bought it 2 years ago will tell you, that's the worst stock I ever had. I'm down 61%. It's horrible. Don't touch it. But the person that bought it this year is up 33%. They've gained 33%. So the exact same stock has almost 100% swing based completely on when you bought it and when you sold it. And that's the thing that's kind of crazy about these meme stocks is if your timing's off even a little bit, you get just hammered. So AMC is another great example. Had you bought that 2 years ago, you'd be down 90%. So basically lost all of your money. But if you bought it this year, you'd be up 14. So you'd be beating the S&P 500. So again, it's just crazy. I mean, and it's hard to really predict it because it's not based on fundamentals.
You talk a little bit about timing, but can there be meme stocks that are good purchases? I think of Tesla is a meme stock, but it has sort of the fundamentals behind it. Are there times when it might be worth it to buy a meme stock?
And that's a great question. Tesla's the greatest example. Of all the stocks that are tracked by the Round Hill Meme ETF, Tesla is the only one that's up both year to date and in the past 2 years. And that's exactly right, because they have the fundamentals, they have the technicals, they have all the things that we investors here at Investor Business Daily are looking for. So in a way, I'd kind of say that Tesla, technically, yes, it's a meme stock, but it's kind of more than that. It's more than just the hype. It's more than just the chatter online. It's got they're delivering real profits, real vehicles.
Right. And, we talk about the meme stock craze that burst onto the scene in 2021. That was a couple of years ago now. It seems like every once in a while we see it pop back in, with Bed Bath and Beyond, with AMC. So is there a cycle to this? Is there typically a time where we see meme stocks surface more, and what would that correlate to?
It's still kind of early to see. It was such a new development and it kind of caught everyone off guard. I do think that if short selling creeps up again, so the meme stock investors really put the fear of God into the meme stock, the shorts, and they've really driven those short levels down. If those creep back up, and I suspect they will, then I think you might see another run at these meme stocks. But right now, I think it's kind of played out.
Yeah, that's interesting. And there's so much psychology behind this as well. Fear of missing out or FOMO is such a huge driver of this sort of meme stock trading. So as an investor, are there certain strategies or things that I could incorporate into my routine that can help, kind of combat those FOMO buys?
Yeah, that's a great question. I think it comes back to what we tell people here is, can slim. You want to look for all the things we look for, earnings growth, earnings momentum. You want to buy at the right time. You want to look at the chart. You want to look at the buy point. You want to make sure it has annual growth. You want to look at the management. You want to look at the new product pipeline. It's perfectly fine to get your stock ideas, and I'm stressing ideas, online. I think that's fine. But you have to be able to take it and make it more than just an idea. You don't want to just buy it because someone was talking about it on Reddit. You want to run it through your own system, your own, thing. And I think Can Slim's a great way to keep you honest. And Can Slim would have picked up Tesla because it does have the earnings growth. So I think if you kind of blend kind of rational decision making with kind of the excitement of meme stocks, you can actually kind of do okay.
Just to kind of wrap this up for everybody, then, what is the thought process investors should have then the next time they see a meme stock pop?
I think you need to pause. So rather than just hit the buy button, which is so darn tempting, and I will admit for some GameStop investors, it did pay off just to hit the buy button, but they end up giving it all back anyway. So I think you just kind of take a half a beat, you take a couple breaths, and you kind of say, all right, there's a lot of interest around this. I understand the story. There's always a story that's so compelling and so interesting. Just put that aside and run the numbers, run it through Market Smith, take a look at the relative strength, the EPS ranking, and see how it kind of comes out. And if that is still compelling, then I think that it's okay to take a chance. But then also remember our other rule, if it does go against you, don't ride these things down 90%. Make sure you cut them short at 9 or 10%.
Right. I think those buy and sell rules are always critical, no matter what stock you buy. Matt, thank you so much for your insights today.
Thank you.